Okay, friends, good evening to every one of you. We'll start the second day session now. It's actually 4 minutes past 3 o'clock. So we'll start a second session. And let's try to recapture what we learned yesterday. Yesterday, we have learned some of the basic concepts of income tax with reference to charitable organizations. We have seen who is a person, what is income. This is a charitable organization, and we have had a little elaborate discussion on definition of charity, especially with reference to any other object of general public utility, GPU. We also saw the decision, Supreme Court decision of Ahmedabad Urban Development Society, and also we have seen the various exemptions. The two streams of exemptions for charitable organization, namely Section 1023 and Section 11 exemptions. We have briefly saw the Section 1023 exemptions, especially the educational and medical, and then they don't need to get themselves registered with the Commissioner of Income Tax. And we have also seen now the Supreme Court decision, another decision of New Noble Educational Foundation yesterday. And then we have seen the various the conditions for exemptions. Okay, the various conditions for exemption to Section 11 to 13. And we have seen when we don't fulfill those conditions, then we are not eligible for exemption under Section 11. Okay, right? And today we're going to see the various exemptions available to us under Section 11. And before ending, we also saw anonymous donation. What is anonymous donation, when it becomes anonymous donation, and what are the documents that we are expected to keep when we get anonymous donation. Not only anonymous donation, even the voluntary donations, voluntary contributions that we get, the records that we are expected to maintain in an organization. Okay, right? So with this, now we'll move on to the second day's of today. Today's our learning will be essentially relating to the exemptions, the various exemptions available to charitable or religious organizations. Okay. We have seen yesterday the various income of charitable organization. We have seen that voluntary contributions, donations, corpus donations, income from property held in a trust, okay, and capital gains. And finally, we have also seen the profit and gains of businesses. Okay, right, business. We also seen when a business can be carried out by a charitable organizations. Okay, right? We have seen that. Today, we are going to see the various exemptions available to charitable organizations. Basically, Section 11 gives us 6 different exemptions to charitable organization. There are 6 different exemptions available to charitable organization. The organizations are given the opportunity or the choice to choose any one of them or combination of any one or two or any one or three, more than 2, more than 3, and then not to pay taxes. Okay, the idea of these various exemptions available to us is that when we comply with the law in the correct way, government does not want us to pay taxes to the government. The idea of government is not to tax us. Government wants us to get the income and apply for charitable purposes. The first or the basic or fundamental exemption is income applied for religious or charitable purpose. Okay, this is and or charitable purpose. When you apply income for religious or charitable purpose, whatever you apply, it will be allowed as exemption to you. Okay, right? What is application of income? All my project or program expenses or application of income. Application of income may normally, when we talk about arriving at net income or net profit from an activity, what we do is that we take the income and we deduct the expenses in connected with earning that income. Okay, and then we arrive at the net income. Whereas for charitable organization, we don't have the concept of expenses. We don't have the concept of expenses to earn income. What we have is applying the income towards objects of the organization. Let me repeat again. For charitable organization or religious organization that are registered under section 12AB, what the law says is that you apply the income, okay, for charitable or religious purposes. They say that the income from property or the income of the trust, either for charitable or religious purpose, to the extent to which such income is applied for such purposes in India is allowed as application. So whatever income that we apply towards meeting the object of the organization, object of your trust, or object of the society will be allowed as deduction to you. That is why all our program expenses are allowed as application. All our program expenses are allowed as application. All your recurring expenses or revenue expenses, okay, are allowed as explanation. You pay salary every month, allowed as application. Rent, allowed as application. Telephone charges, allowed as application. These are all recurring, regularly happening. Electricity charges, allowed as application. As long as it is towards the objects of the organization. Such purposes means such purposes means towards the objects of your organization. As long as your expenses, your payments, your payouts are towards the objects of the organization, towards meeting the objective of the organization, it is allowed as application. That is why you notice that even capital expenses are allowed as application. When you buy a piece of land for constructing orphanage in the future, allowed as application. When you buy a piece of land for constructing a church, in the future, allowed as application. Or this year you want to construct church, the construction expenses will be allowed as application. You buy equipment for hospital, allowed as application, because these are all towards the objects of the organization. You are trying to achieve the purpose for which this organization is created. When you do that, whatever amount, in whichever form you spend it, is allowed as application to you. Of course, there are certain restrictions on the way we spend that. We will see that later on. Even repayment of loan is also allowed as application. Past debts when you are repaying, that is also allowed as application. Supposing you wanted to buy a school van and you don't have so much money now, what you do is that you take loan from the bank and then buy a vehicle. The law says that the repayment of loan is also allowed as application. Of course, you'll have to wait till I explain the main loan concept, because the payment out of any assets you purchase out of loan will not be allowed as application, or any payment you made out of loans will not be allowed as application. Only the repayment will be allowed as application. We will see that little later. Okay, right? Even the repayment of loan is also allowed as application. When we talk about the capital account, the capital expenses like purchase of vehicle or purchase of computer, okay, all these are allowed as application. Till about a few years back, various courts have said you can even claim depreciation also. They allowed even depreciation, but now depreciation is not allowed. You're not eligible for depreciation. Okay, because it is a double deduction. Government says, the tax law says, you can claim capital expenditures or application as long as it is worth achieving the objects of the organization. Okay, right. And what else are allowed as application? When you contribute to another trust, interest and donation, you may transfer to another NGO. That is also allowed as application to you. Okay, there are certain conditions are there. You need to observe few things in when you transfer money. Similarly, in loans also, we'll see that little later. Okay, right? All these are allowed as application to you. Not only that, the courts have held your administrative and establishment expenses as application. Administrative and establishment expenses, the rent that you pay, the salary that you pay, the electricity charges that you pay for your head office may be allowed as application. Payment of taxes is allowed as application. This is not allowed as application, but not allowed as deduction for others. Whereas for charitable organization, if you pay taxes, that is also allowed as application to you. For example, God forbid, you violate something, and then because of that, you end up paying taxes to the government. An income tax is not allowed as a deduction for every one of us. I cannot claim from my professional income any income tax that I pay to the government as deduction. Whereas in case a charitable organization pays taxes, income tax, GST, they can claim them as deduction, application of income. Writing of loan to weaker sections. When you make loan to weaker sections, and if you're not able to recover that loan, that also you can write off and claim as application. Loan scholarship or assistance given. You have, your object permits you to give loans to your beneficiaries. Supposing you are helping poor students, instead of giving them scholarship, what you do is that you give them loan, which they have to repay maybe after 3 years or 5 years. Okay, right? Your object permits that. Then you can even take the loan scholarship given to students also as application. Normally, what we do, we take loan as an asset. And recovery, we reduce it from the loan and then we balance that. When we treat loan as application, any recovery will become income in the year of recovery. Loan to poor people. These two are to be authorized by your memorandum or by a trustee. Your object should authorize that. Then you can claim this also as application. What are the records relating to application of income? First one is application of income in India. Yesterday when I talked about it, I very clearly said that your income needs to be applied within India. You cannot apply income outside India. One of the conditions for exemptions. So you need to apply the income in India. When you apply the income in India, you are expected to maintain a record related to application of income. So what are the records should contain? It should have details of the amount of application, name and address of the person to whom payment or any credit is there. You'll have to do that. You'll have to keep that in the register, mention that. And then the object for which such application is made. Okay, application of income register is a very simple one. What they want is that when you spend your income or when you apply your income towards the objects of the organization, they want to know for which object you're spending the money and details of the amount of application, the amount, okay, how much is there by way of check or cash, how you have done that. And you also need to give name and address of the person to whom the payment is made. Okay, right? What is the purpose to whom you are made? And if there is anything you bought it in credit and when you make payment, that also should come. Even the credit also should need to come here. Application of income register. We have designed a simple register here. This is a very simple one. You have an object or purpose of application, name and address of the person to whom payment is made, ledger head and amount. Why I'm saying ledger head? This application register, application of income register, if you need to keep this truthfully, then you will be duplicating because whatever because all our payments towards objects is So the objects of the organization is application. Whatever I spend towards achieving the objects of my organization is application of income. So when such is the case, all my payments, whether it is capital payment, whether it is my program expenses, whether it is loan given, all these are application. And my cash book and my ledger is supposed to capture those information. Okay, when I keep the cash book and ledger complete, right? What do I mean by complete? The ledger, when you input in Tally or when you input in any of your software, you need to give the complete information of the name, address of the person, including the bill number and all those stuff. If you give it in the narration part of it, then instead of repeating all these things again, what you can do is that you can give the ledger head and the amount, ledger head and amount, and you can write the main object and purpose here, Okay, right? Here you can see as per the ledger. Because my ledger will have the complete details, will have their name, address, bill number, and all those stuff. Unfortunately, many of us, we don't do this in our books of account. We are very, very busy people. We don't have time. Even our accounts person do not have time to give the details. What we do is that we just put, supposing travel expenses, what we'll put is by cash, 2,000 rupees. That's all. To whom it is paid, what for it is paid will not be there. Supposing you buy a computer, okay, you will not even write the name of the company or shop from which you purchase the computer or the laptop. No information will be there. Your account head will say computer. Your narration will also say computer. If you maintain that, you are in for bigger trouble. Okay, you need to maintain, keep this application of income register again. Okay, so what my suggestion is that please give complete information in your ledger or when you are inputting in your Tally or in your software. When you give these details, you need not repeat this register. You can open this register. In the name of address column, you can simply say refer ledger head, and here you will get the ledger head and amount. So keep this ledger extract as part of this register, and that will be sufficient compliance. Okay, right? Application of income outside India. This also we have seen yesterday. Yesterday we saw application of income outside India is not allowed as an application. It will be treated as an income and it is subject to tax. This is subject to penal taxes. Okay. Earlier this was not allowed at all, and there was possibility that you could even lose your exemption also. But now, if you apply income outside India, so much of amount that you apply outside India will be deemed to be an income, and that income is subject to special rate of taxes. What is income application means? What is application of income outside India? What is the main meaning of income applied outside India? Supposing I travel outside, let's say, I travel to US for a meeting. Okay, right? There are many of us who are so happy to tell me, I have received invitation, brother, to preach in this big church. I have received invitation to preach in this big conference. And if you account it that way, then it will become application of income outside India. Or you are getting funds from one particular donor who supports you. And that donor says, hey, look, you are closer to Sri Lanka. Instead of me coming from US or from Europe or from Australia, what you do is that you are in India. For you, it's only about 3 to 5 hours journey to Sri Lanka. You go there and start the work and do the work. I will send money to you for the social work, for the charitable work that you will carry out on my behalf in Sri Lanka. That will be application of income outside India, because we are not allowed to carry out any activity outside India. Okay, right? you're not allowed to carry out any activity outside India. Supposing when I travel outside India, right, for fundraising, that will not be application of income outside India. Because I have gone there to raise funds which will come into India, and with that, I want to do charitable or religious activity. Okay, right? When I travel outside India, I do fundraising, and that fundraising, the money will come to India. With that money, I will carry out activities in India. So fundraising expenses is not main activity outside India. Supposing you send your team, okay, you send a couple of your staff outside to attend the conference. What is the purpose of asking them to attend the conference? You want them to learn from the conference. You want them to understand from the conference the developments that are taking place in NGO sector across the world. And then you want to come back to India and use the knowledge gained in the conference to serve the people better. This is again will not be an application outside India. Otherwise, you want to go and start some work in any other country, there's a lot of temptation for us to go and work in the poorer country, Africa, other nations. All these will be application of income outside India. Sometime back, there was a major earthquake in Nepal, and government itself allowed us to go and serve there. In which case, you need to take approval from the Central Board of Direct Taxes, CBDT, and then you can go and spend money outside India. That will be application. Without government's approval, you spend any money outside India, so much of amount that you spend outside India will be income. It will not be application outside India. Okay, right? And what are the details that we need to keep? Very similar information like that of the application of income inside India, in India. So outside India also very similar details. Again, I want to repeat, please in your books of account, when you're inputting in Tally or other accounts, give complete details of the name, address, and other information so that you can write the ledger head and the amount. And this one, along with the ledger extract, will be a compliance for the purpose of this register. Okay, right? Any doubts, any queries, you can put in the chat box. I will answer that. Next register that we need to maintain is projects, record of projects. You don't need to give much information here. All you need to do is that you need to give the various projects and institutions run by the trust. I'm sorry, when I use the word trust, I mean all forms of charitable organization or religious organization. The word trust includes society, it includes company, it includes an university or institutions come into existence by way of a law, either in central or state, okay, or any other institution. So when a trust is running projects, when you may be a church running only one church, okay, your trust may be registered as a religious organization running only one church. So your register will say, name of the church, address, and the object. What is the objective for which you are running this church? Okay. In case you have more than one church, let's say you have 3 churches in different places, you should give details of that. If you're having multiple projects, okay, right, multiple projects, then you have to give record of each project, okay, in this register. There is nothing beyond is required here, but I'm suggesting that you can have, a few more columns because FCRA, in Form FC4, we are reporting this. So it will be better if you can add these two, but it is sufficient if you keep these first 3 columns alone. Name of the project, objective, address of the project. If you keep this, this will be sufficient compliance. The next one, we talked about, we're talking about various exemptions. The first exemption we talked about is income applied for religious or charitable purpose. The second one is that what the law says is that you can accumulate income accumulated up to 15%, section 11(1)(a). What law says is that you are allowed to accumulate every year up to 15% of your income. Let's say your income of the organization is 100. Government says it is enough, you spend 85 rupees. The balance 15 rupees, you can keep saving every year. Supposing the next year, instead of 85 rupees, you apply 90 rupees. In which case you can accumulate 10 rupees. The third year, supposing you spend 105 rupees, you are not eligible to accumulate any amount, but your application will be restricted only to 100 rupees because each year income and application is looked at independent basket. So in 1 year, if you receive 100 rupees, government says you apply that 100 rupees. There is no question of any carry forward or set off of earlier income. So each year, whatever you get, you apply that. So, and again, they say that from each year's income, you can accumulate up to 15%. That's all. Here we talked about 100 rupees and then we gave an illustration saying that you apply 80 rupees or 90 rupees. Okay, right? And then we said you can accumulate. We also saw supposing you apply more amount. Let's take the case, you applied only 70 rupees. How much you should apply? You should apply 85 because 85% you should apply. You applied only 70, which means that balance 15 will become taxable and you have to pay taxes on that. Till financial year 21-22, we had the portion of basic exemption. But from this year onwards, 22-23 onwards, we do not have the basic exemption of 2.5 lakhs. So please remember, up to 15% you are allowed to accumulate. And many times, life will not be very simple, okay, right? Not all of us get donations, general donations, and we are able to spend the money. There can be instances where we get project income. What is project income? My donor says that I'll give you, let's say 12 lakhs, and you spend the money in 12 months. Each month you spend about 1 lakh rupees each. You spend about 1 lakh each, okay, right? So let's take the example. Let's take an example. You get income of the trust. Your voluntary contribution is 10 lakhs. And you receive project grant of, let's say, 24 lakhs. And this project grant, you received it in January 2023. And this amount, you know, to spend every month 2 lakhs up to December 2023. So I hope you understand what I'm trying to say. I'm sorry, I'm really sorry. My PPT is not visible. I'm sorry, just a minute. I'm sorry. Is my Excel visible to you? I put an Excel sheet now. Is it visible?
Yes, sir.
The chat box, if you can put a message, then it will be helpful to me. I'm not seeing any response at all.
Sir, visible, sir.
Are you able to see my Excel?
Yes, yes.
Yes, sir.
One of you maybe unmute and then say that.
Yes, sir.
Okay, thank you, thank you, ma'am, thank you. Like, okay, right. See, here is, an illustration. Okay, we are talking about exercise of option under section 11.1, explanation 2. See, we have seen so far two type of exemptions. The first exemption, what we've seen is that any amount I apply for, towards the objects of my organization, it is allowed as application, irrespective of the nature of the expenses, payments. It can be recurring expenses, it can be revenue expenses, it can be my program expenses, it can be my administrative expenses, it can be my capital expenses. As long as I spend towards achieving the objects of the organization, it is allowed as application to me. Second exemption available to us is that we are allowed to accumulate 15%. In other words, government says you spend 85%, I will give you 15% as accumulation to you. You don't need to spend 15%. You can keep on accumulating this 15% year after year. When they say accumulation up to 15%, you can accumulate 10%, you can accumulate 5%, depending on your expenses, your need. But you cannot accumulate beyond 15%. If you have applied only 80%, you should have applied 85%. The balance 5% will be paying taxes. Both this exemption presumes that we get income in the year and then we apply within the year. Because I already explained the concept of each year as an independent basket. You get income and then you apply the income within the year. But it will not happen for all of us, or may not. And to many of us, it may not happen because sometimes we may get a large grant in the month of March 23. Okay, right? Grant received in the month of March 23 also is possible. This March 23 grant is meant for, let's say, next year, financial year 2023-24. But what the law says you need to apply 85% of this 44 lakhs. Which is 37 lakhs 40,000 rupees. You need to apply that. Whereas my donor here says, out of the 24 lakhs, what he says is that you need to spend 2 lakhs every month. So out of this 24 lakhs, how much I will be able to spend this 10 lakhs. Okay, let me say, I will be able to spend this 10 lakhs completely. This 10 lakhs I'll be able to spend. And here, I'm expected to spend for 3 months only 6 lakhs rupees. Because my donor says every month you spend 2 lakh rupees. So the balance 18 lakhs, I can spend only in the next year. The balance 18 lakhs, I can spend only in the next year. Okay, right? I can spend only in the next financial year. Okay, right? Here, similarly, this 10 lakhs also, I will not be able to spend any money here because my donor is given for 23-24. I'll be able to spend even this 10 lakhs also in the next year. So, how much I can, I'll be able to realistically apply current year. I can only apply 16 lakhs. Whereas how much I'm expected to apply? 37 lakhs 40,000. So there is a shortfall here. What is the reason for shortfall? Because I receive income pertaining to next financial year. So government says when you get income like this, 21,40,000, they are giving us an option saying that you can exercise this option under section 11(1). And then when we apply that option, government says, I will deem this amount, whatever is this amount, I'll deem this as application. This 21,40,000 is allowed as application, as deemed application, even though we have not spent the money, by fulfilling certain formalities. In other words, the simple formality by filing Form 9A, government says so much of amount that you could not apply for a valid reason, you can spend that the next year. I will allow that as application to you. Okay, right? So this is one. There is another one is also possible. We take the example. I think we have friends from schools also. During COVID, we could not get the fee from the children. Okay, let's take our fees. Our school fee is normal fee is, let's say, what I received in cash is 20 lakhs. My arrears of fees is, let's say, 30 lakhs. My total income is 50 lakhs. How much I need to apply? %85 of this 50 lakhs. But what I can realistically apply for the current year, I can apply this 20 lakhs. Okay, right? And what I have not received, arrears of fees is what I have not received, I will not be able to spend the money. I will not be able to apply that because I have not received this money. So which means that I have a shortfall of 22 lakhs. Government says when you have not received the fees, okay, when you have not received the fees, you can use this option under section 11(1) and file Form 9A and claim this as application. I have given the illustration of school fees. There can be a case where we have some large fixed deposit of the bank. We put the deposit, and what we do is that in the deposit, we have put it as a reinvestment of funds. My deposit money will get invested in the bank account. I get an interest income. Let's say I get 5 lakhs interest income. I will not get it in cash with me. What will happen? That 5 lakhs will again get into my fixed deposit. And instead of 50 lakhs, now my fixed deposit will become 55 lakhs. Whereas I will account in my books of account, bank interest received 5 lakhs as income, FD invested 5 lakhs as application, not an application, as an investment. These 5 lakhs I will not be able to apply. So such cases, government says, I will allow this deemed application option under section 11(1). I hope you understand the concept here. Okay, right? Sorry, my mistake. I'm really sorry. Just hold on for a second. Okay, what government says is that when we have instances like this, we can use this option under section 11(1), call this as a deemed application. The reasons I've already explained to you. There can be two reasons. Okay, one is that you have not received the income or for any other reason. In such cases, all you do is that you have to file Form 9A. Okay, this needs to be filed electronically in the portal. And please note that you have to file this on or before 31st August. You have to file this Form 9A. And you will be able to file this Form 9A only if your accounts are complete. If your accounts are not complete, then you will not know what is the exact amount for which you need to file Form 9A. Okay, right? So anyway, government has relaxed it this year, but I won't. But I wouldn't like to take a chance. So please complete your accounts and get it audited. At least check it a little bit, and then so that we know where we stand and we file this option, this section 11.1. The option seems simple. What happens if I don't apply? Right? If I don't apply the income, I'm saying I've exercised option under section 11.1, explanation 2, saying that so much of amount I'm earmarking for, I'm filing this option because I have not received the income, or I've received income for the next financial year, I'm filing that. And what happens is that next year, so much of amount that I said as a deemed application, I will have to apply that, spend that money. I cannot claim this as additional application, no. In case I do not spend, let's say I have been said I'm saying that 100 rupees is my deemed application. If I do not spend this 100 rupees, I spend only 70 rupees and 30 rupees I did not spend out of main amount that I've said as a deemed application. This 30 rupees is subject to tax at a special rate under section 115 BBI. Okay, so this main amount is subject to tax at a special rate under section 115 BBI at 30%. Okay. I hope this is clear. We go to the next one. Accumulation of income for special purpose, specified purpose. We saw, 3 exemptions so far. Out of the 6 we talked about, we saw about 3. And life again is not that very simple, okay, right? First we saw whatever I spend, whatever I apply towards achieving the object is my application. I claim that. Second one, what we said, I am allowed to say up to 15%. Good. Third one, I have not received income, or I received income which is meant for the next financial year. Then I can use that option in section 11. Supposing I have a project or a donor who gives me grant for 3 years. Of course, these days, nobody is giving it. When I started my career, there were donors who were giving funds for 3 years, but nobody gives it. It means that you may have rare occasions where somebody comes and gives you money saying that I will give you so much money, you spend the money within the next 3 to 4 years. Okay, right? In which case, also government gives us an option. Or I want to earmark, I want to save, set apart for a specific purpose. Okay, right? I want to set up for a specific purpose or save for a specific purpose, which amount I will use only for that particular purpose. Government says, yes, you can do that. You can accumulate or you can set apart your income for a specific purposes. So this is out of your total income. Let's say your income is, again, I'm going to use my, let's say income of the trust. When I use the word trust, I mean all 3 forms. Okay. Income of the trust is, let us say, 1 crore rupees. It is 1 crore rupees. Okay, right? And you have raised this 1 crore rupees, so much money, consciously, because you want to construct, you want to spend on a capital expenses. Okay, right? And your application during this year is only 50 lakhs. What is the amount you are expected to apply? You are expected to apply 85% of this, 85 lakhs. So which means that you have consciously saved 35 lakhs for a specific purposes. The purpose can be anything. So when you have this type, because here you have saved, this is not just a windfall. You have consciously saved this money because you could have spent more. When you received 1 crore, you could have spent that, but you spent, you applied only 50 lakhs because you know that you have a major expense ahead. You want to keep saving for that expenses and then so that you can use it for that particular purpose. So when you earmark, when you set apart, or when you save, accumulate money for a specific purpose, government says you can use this 11.2 option, set apart or accumulation under section 11.2. So what is that 11.2 setting apart? Okay, this is my screen available to you now. Good. Okay, great. So this is a conscious decision of the board. Okay, right? This is not happening just like that. You take a conscious decision to save money for a particular purpose. You take a conscious decision. So what do you do? That the board takes a decision and then they say that we are saving so much amount this year for X purpose, and this amount will be spent within this particular year period. Let's say the organization is saving, is earmarking or accumulating funds for school building, okay, or let's say school bus. So they will have a board meeting and say that we are setting apart or we are accumulating an amount of 20 lakhs for the purpose of school building, classrooms, 10 classrooms to be constructed. And this classroom will be constructed within a period of 4 years from now on. Or they will say that supposing the board meeting is held on 31st March 2023, they will say that on or before 31st March 2027, this building will come into existence. Okay, you may have even, you may in your board meeting even say the total cost of the school building, the classrooms is going to be 50 lakhs. The choice is yours, okay, right? So this is a conscious decision in your board, okay? You'll have to take a decision and the board minutes will specify the reason why you're earmarking, you're setting apart or you're accumulating, because as the word says, this accumulation is for a specific purpose. The reason why you're accumulating, the amount you're accumulating, the period up to which you're accumulating. Okay. And then you need to find Form 10. Once when you take a decision, pass a resolution, you'll have to file Form 10. And this Form 10 again needs to be filed by 31st August. Filing Form 10 is relatively easier compared with 9A because you will know approximately how much money you're raising. Many of us will know exactly how much money you're raising once we are raising for a particular purpose. So filing Form 10 before August should not be a problem for you. But even then, I'm advising you to get the accounts audited so that we know that whether there are any other phases of shortfall. For example, you would have consciously collected, let's say, 50 lakh rupees. And you would have saved money also. For example, out of your income, you are expected to apply 85%. But what you're doing is that instead of applying 85%, you applied only 60%, so that you can save that 40% also for the building. In which case, your special drive of collection or setting apart will not be helpful unless your accounts are ready. So please, try to complete your accounts and get it audited well before 15th August so that we know where we stand and then the filing of the forms can be done without any difficulty. The next one is that whatever amount you are earmarking, you are setting apart, you need to invest that in 11.5 modes. Whatever amounts that you are setting apart, you need to invest that in 11.5 mode. What is that 11.5 mode? We'll come to that little later. You need to invest that in 11.5 mode. And this can be earmarked only for a period of maximum 5 years. It cannot go beyond 5 years. Okay. You can say that we will put up the building within 5 years from the end of this financial year. It cannot go beyond 5 years. So to be careful, cautious of the period up to which you are earmarking. Let me just discuss a few main complications. And as I told you, you have to invest that money, right? And I always suggest people when you're talking about investment, that you put this money in FDs because any other investment, you will accidentally, without knowledge, without realizing, you might withdraw and spend the money. Okay. So instead of keeping this money in fixed deposit, okay, right? And you use the money, you utilize the money without realizing. You utilize the amount or the amount ceases to be remain in invested. What happens? Let's say you're keeping this money in savings account. There was an urgent need. What you have done is that you're not utilized it. You're given as a program advance to somebody for some program. Finished. You will not be eligible for this 11.2 exemption. Or you apply for other charitable activities. Okay. Or transfer funds to another organization. It can be in the form of a temporary loan, temporarily to the organization or the staff, or even temporary loan to another project. Let's say you're an organization that you are handling about 4 or 5 projects. And in one project, the donor says, he has already approved the project and he says, hey, John, I'm not able to send the money immediately. It will take another 2 to 3 months' time. If you can manage the funds, the projects with other funds, it will be really good because we need to report to our donors. So please see whether you can do that. And in such cases also, you should not use this 11.2 earmark money. Amount accumulated under section 11.2 should not be any other purposes. And you cannot use this money beyond the period up to which you are accumulated. Supposing you say, I'm keeping it for 5 years, accumulating 5 years, you can use it within 5 years. You cannot go beyond 5 years. Can I change the purpose? It's very much possible as long as it is in the overall objective of the organization. You can apply for modification of the purpose. You can approach the income tax officer and he will grant you the modification. And then you will be able to use the funds. Okay, right? And this is what is given under section 11.3. And any violation of this will be treated as income. The moment when it is not invested or it is used for some other purpose, when it is utilized for some other purposes, or given for some other charitable purposes, you give it to another organization, you give us a loan to somebody, okay, you're not used it within the period. Supposing you say it is 5 years, you're not used it within 5 years, then it becomes income in the year in which there is a failure happening. So section 11.3 very clearly says that if you use this money, right, for any other purpose, or it remains invested or deposited, then it becomes income, okay, income of the trust. It shall be deemed to be income of the person when it ceases to be accumulated or remains so invested, okay, income accumulated, set apart, but not utilized, okay, right? Supposing the 5th year you used it, you're not using the 5th year, and the 5th year itself will become the income, okay, right? So you have to do that. And you make payment to others, it will become income. And this violated income will be taxed at 30%. Okay, whatever is the violation, it will be taxed at 30%. And records relating to income set apart, I think I'll take it tomorrow. Okay, because we have other things to carry on. We will take up these records tomorrow. Investment register does not require much explanation, so I'll take you through. Amount invested, you have to keep register of. I'll show you 11.5 investment. Okay, this also I'll come to that later. Okay, right, I'll come to that investment register later. We'll go to the corpus donation. The other things I will cover tomorrow. What is corpus? Corpus donation used to be one of the easier option available to all of us till about 3 or 4 years back. Till 2021 it was easier option available to us, but not so anymore now. What is corpus? Corpus in simple term means towards capital. Okay, when I say corpus, it is towards capital. So anything you receive towards capital is generally not an income. That is what we discussed yesterday also, right? The income, in 72, the law, Income Tax Act was amended to include voluntary contribution also, because voluntary contribution by nature is not an income. Similarly, capital receipt is not taxed. Corpus donation, being a capital receipt, should not be taxed. But for charitable organizations, Section 11(1)(d) clearly says that income in the form of voluntary contribution may make with the specific direction that it shall form part of the corpus. That it shall form part of the corpus of the trust or institution is corpus donation. Okay. What are the conditions for corpus donation? Corpus donation in simple form, it is the voluntary donation, voluntary contribution, but it comes with a specific direction, with a specific letter stating that the amount so much contributed is corpus. So in other words, corpus donation, the decision is by your donor. Your donor says it is corpus, then it becomes corpus. The board does not have the power, freedom to decide an amount as corpus. Okay, right? I hope I'm making myself clear to you. Okay, right? And this is a format of the corpus donation letter. You can go through that. And they have added one more condition to this. Then it will become corpus. First condition is that there should be a specific direction that it is towards corpus. The second one is that the corpus donation needs to be invested or deposited in 11.5 mode. Okay, right? So 11.5 mode. Only when it is invested in or deposited in 11.5 mode, then this will be corpus. Supposing you receive corpus donation and you get a letter stating that this is corpus, but it is not invested in 11.5, then it will not be corpus donation. Okay, am I clear? And these are the 11.5 investment. The list is actually not exhaustive. There are more here. If you look to the main list, most of them are government controlled government one, scheduled bank or cooperative bank. Sometimes it can be a problem also. Then Unit Trust of India and mutual funds is also there. But I would advise caution if you want to invest in mutual funds. Okay, right? Government of India securities, public sector companies, IDBI, income, investment in immobile properties. Okay, right? So these are all the 11.5, there are more. If you go through the section, you will get it. But my suggestion is that try and invest your funds in the safer one, where you can liquidate easily also. Okay, right? And the next one, first one, what we saw is, what is corpus? Corpus is the donor should give it as corpus. The second condition to for the corpus donation is that it should be invested in 11.5. Now, what they say is that this again, or recent amendment, what they say is that application for charitable or religious purposes from corpus shall not be treated as corpus donation. So any application of a corpus is not corpus. Supposing you received, let's say, 100 rupees, and out of that you spend 50 rupees, as application. This 50 will not be allowed as application. Okay, right? And 100 rupees balance 50 also, when it will be corpus, we'll see that. Okay, right? So this is very, very important one. And what they say is that in the proviso, the amount may not so treated as application. We saw the illustration. We said 100 rupees is received as corpus donation. Okay, right? Only 50 rupees is used for your running of the activity, trust as application. The balance 50 is put in fixed deposit, 11.5. So on this 50 is allowed as application. This is okay, allowed as application. This 50, because this was used and not allowed as application, what the law now says is that the amount which is not allowed as application will be treated as application for charitable purposes, in which the amount is invested or deposited back. We talked about this 50 lakh which is used. Supposing the NGO deposits out of that 30,000 rupees or 30 lakhs into 11.5 mode, then this 30 will become corpus, and then this will have application to you. Okay, I hope, I'm clear. You are able to understand what I'm saying. Okay, the corpus donation. So corpus donation, the conditions are, first you should get a specific letter saying that this is corpus. Number two, you should deposit this money in 11.5 mode. Then only you'll get corpus. Supposing out of corpus you apply, you spend as application for your activities, so much of amount that you spend as application is not allowed as application. In the subsequent year, when you are recouping, when you are putting back the amount so applied other than corpus into 11.5 mode, that will be allowed as application to you. But I tell you, this is not simple. They are not allowing this. It's very simple. Anyway, this is an illustration I've given here. Let's take first the 21-22. In the year 21-22, the corpus donation received is 1 lakh. And they have put the entire 1 lakh in 11.5. So they are eligible for corpus donation. And in the financial year 22-23, they have withdrawn 50,000 rupees. Okay. And again in 22-23, received 1 lakh corpus donation. They are able to put only 50,000 rupees in FD, 11.5 mode. Balance 50,000 rupees they used for running organization, but that will not be allowed as application, because application out of corpus will not be allowed. Okay, right? And what they are doing is that, and again, out of this 1 lakh, when they withdrew 50,000 rupees, they use this 50,000 rupees for application. This again will not be allowed as application. This again will not be allowed as application. But they are trying to recoup that. What they are doing is that they are putting 30,000 rupees out of this 50,000 rupees, another 50,000 rupees out of this 50,000 rupees back in the bank account 11.5. This will be allowed as application, this 30 and 50. So whenever you use corpus funds for application, it is not allowed as application. In other words, government says when you get corpus, you put it in fixed deposit, only enjoy the interest from the corpus. That's all. If you withdraw and use it, you are not allowed any application. Supposing you had some reason, some necessity, you have gone and then spent the money. In subsequent year, when you are recouping, the year in which you are recouping, it will be allowed as application to you. Okay, right? And it is not going to be that easy. This already we've seen this slide. It's not going to be easy. What they're saying is that in case you want to recoup, in case when you want to get back the corpus donation benefit, you need to fulfill these conditions. Okay, you need to fulfill this condition. What are those conditions? The amount that you have withdrawn, the application can be only in India. You don't give as corpus donation. You comply with the TDS provisions. You don't make cash payments above 10,000 rupees. Okay, right? And there is no question of any carry forward set off of application. Anyway, let's not worry about it. Application is allowed on actual payment, not on accrual basis. You should not benefit directly or indirectly specific person. This will come to that little later. Okay, right? So in other words, what government says is because the tendency could be when I withdraw from my corpus donation, Anyway, government is not going to allow by application in that year because any application of corpus is not application. So you should not think that you can spend the money in any way and then later on you deposit the funds back and get the deduction. Government says that will not be possible for you. You don't get that benefit. If you want to get the benefit, you comply all the requirements. In fact, all these requirements will be fulfilling for our regular deductions, regular application. We'll have fulfill this. Only then our regular application will allow. So just because you're withdrawn from an amount which is not allowed as an application, you cannot misuse or abuse that provision and still want benefit. So you want to get the benefit, government says you comply with all the requirements which otherwise will be doing it. Only then I'll give you the direction to you. And the next one. If you have taken corpus before 1/4/2021, okay, right? Now you want to recoup that. If you have taken corpus machine before 1/4/2021 and you're withdrawing and then recouping that, it's not allowed to you. And they also say the maximum period of recoupment is only 5 years from the end of the previous year in which application was made from the corpus. Previous year, for a recent understanding, it's a financial year. From the end of the financial year in which you have applied from the corpus. Okay, right? So I think this is what I want to tell you. I hope you understand what it is. Okay, right? So there are donations can be normally two types of donation. One is without any specific direction. This is your voluntary contribution. Okay, right? This is your normal voluntary contribution. And you are eligible for 85% application. Okay, right? You can save 15%. You get to the specific direction, that is corpus. You put the money in 11/5. When it becomes corpus, you get the deduction. You get a specific direction, but you're not invested. But you will not get deduction. It is a non-corpus. Application is also not allowed. But when you want to recoup that, I have put another chart here. Here's a corpus donation. You have withdrawn some money and spend out of the money withdrawn. Whatever you spent will not be allowed as application, but you spend the money fulfilling the various conditions for explanation. When you spend fulfill the conditions, when you're recouping, when you're putting back the money in deposits, you will be given corpus donation. I hope you understand, but there is a time period also given here. You have a 5 years period from the end of the financial year which the application is made. No recoupment of corpus taken before 1/4/2021. Okay, any doubts or any clarification, just put it in the chat box. Then I will move forward quickly. Then the next restriction is that any amount paid out of income, this is not of a corpus donation, any amount paid out of income, okay, right? To any trust, and then when you make to other trust with a specific direction, right, that it shall be corpus of the trust, it will not be allowed as application. What is the idea behind this? Okay, right? What is the idea behind this? Let's take the example. I'm sorry, today also it looks like we'll go up to 4:30. I hope you have no issues. Okay, right? Let's take the example. An organization income is, let's say, 100. And it is expected to apply 85%, okay, or 85 rupees. Let's say it is applied only 70 rupees. So the balance 15 rupees, they're not able to apply. What they do is that they give us donation or intercorporate inter-charity donation to another trust, okay, trust B, and this amount they contribute as corpus donation. When they contribute this as corpus donation, anyway, before this amendment, this was allowed as application, so there was no taxable income. No taxable income. So they no need to worry about taxes. Here, this trust B also, when they receive this amount, this is corpus donation. So they no need to worry about application part of it. So double benefit was available. So government said, you cannot have double benefit. So only one of you will get benefit. So when you make donation as corpus donation to another trust, the other trust will enjoy corpus donation, but you don't get any deduction out of that. What they're saying is that in case you make any corpus donation, the other trust will enjoy corpus donation, but you don't get corpus donation. You don't get deduction, you don't get application at all from your income. Okay, when you make it as a normal inter-charity donation out of the current year's income, it is allowed as an application to you, and the other trust needs to apply 85% of the income from the trust. The records related to corpus donation, you'll have to give details of the contribution received, name and address of the donor, their PAN number or Aadhaar number, application out of corpus donation, if there is anything, amount of application, name and address of the person to be made, object for which you made. And if you are giving to another trust as corpus donation, details of such corpus donation, this is out of the current year income. Okay, right? And 11.5 investment also allowed to give. What are the 11.5 investment? Because only when the 11.5 investments are there, you are eligible for corpus donation. Okay, you'll have to give 11.5, other than 11.5 also have to give. And you'll have to give, any application out of the, earlier years, out of corpus also you'll have to give that. Any out of the earlier years also you'll be giving that. And also you'll be giving any amount paid as corpus out of the earlier income also. You'll be giving that. And here also the balance 11.5 and other than 11.5 you'll be giving details. And then when you recoup, when you're putting back the money, you'll have to give these details also. So we have put a form, a register, a simple register. You can use this. These registers are illustrative purpose only. The choice is yours to keep the way you want. Okay, right? Where you are able to give the details which the department, which the income tax department wants that. So you'll give the name and address of the donor, his PAN or Aadhaar number, amount of corpus donation, right? Date and receipt number, amount invested in the 11.5, and where you have invested. Okay, right? Bank, or if it is a bank, or if it is a mutual fund, all those information you should give that. And similarly, application out of corpus donation also have to give. What is the amount withdrawn, year in which you withdrawn, amount applied out of corpus donation, which is out of this, how much you have spent, what is the purpose of utilized, name and address of the person to whom these applications are made, complaints of conditions, we already explained to that. And in case you are recouping, what is that amount recouped, which year you are recouping. Please note that the period is only 5 years, right? From the year of withdrawal, from the recoupment only 5 years, and you can recoup within 5 years time. And in case you make inter-charity donation to another organization, you should have these details: date of donation, name and address of the recipient, their 12VAB registration number, amount of charity donation, income from which year you have paid it, whether it is current year or the earlier year you have done it, and whether you have paid it as a corpus donation or a normal donation. Because if it is a corpus, then you're not eligible for tax deduction. If it is out of earlier income, you're not allowed for deduction. Application. Okay, right? Application out of loan and borrowing. Can I take a few minutes because I have two more topics to cover, and then we'll wind up. Application out of loans and borrowings. The law now very clearly says that any application from loans and borrowing is not considered as application for charitable purposes. Okay, right? What is that? Supposing you want to buy a vehicle for 15 lakhs. When you approach bank or any financier, they will not give you 15 lakhs loan to you. What they may give maximum 10 lakh rupees. I'm just giving illustration. It can be more also, or it could be less also. So this 10 lakh will not be allowed as application. Whereas your vehicle cost is 5 lakhs, which means that you're paid from your pocket 5 lakhs from your income. This will be allowed as application to you. This 5 lakhs will be allowed as application. Application of loan and borrowing will not be allowed as application, but when you're repaying this amount, when you're repaying this 10 lakhs, okay, right, whatever amount you're repaying, along with the interest is allowed as application, repayment. Okay, so let me go to the slide and explain that to you. So any application out of borrowing is not allowed as application, but when the loan or repay, right, income of the previous year, current year's income, if you are repaying out of the earlier year accumulation, it not be allowed as application, because I've been explaining right from the beginning that each year is considered as an independent basket. Out of each year income, what you're applying, only that will be counted. So anything you're repaying out of earlier year will not be allowed as application to you. Okay, right? And here also, very similar to corpus, you have to fulfill the conditions, which normally you will fulfill, will comply for meeting or for your regular application. So you have to ensure that you are fulfilling all the conditions, because when you take the loan, you cannot presume that because this is not allowed as application to me. Any out of the loan, whatever I'm claiming is not allowed as an application to me. You cannot presume that I can spend anyway and then still get the benefit when I repay. So government says you have to fulfill all the conditions, only then you'll be eligible for the repayment as application. Here again, if you have taken any loan before 1/4/2021, repayment will not be allowed as application to you. Okay. Any loan if you have taken before 1/4/2021, repayment will not be allowed as application to you. And repayment again has to be made within a period of 5 years from the end of the financial year. For our easier understanding, it is financial year. From the end of the financial year in which such application is made from the loan. Supposing you have taken a loan, we have talked about 10 lakhs for a vehicle of 15 lakhs. In the year 22-23, yeah, from the end of the financial year 23 is 5 years from this. So within 5 years from this, you are allowed to, you can claim this application. And they also say that only for 5 years your application will be allowed. Supposing you are taking 50 lakhs for your school building construction or a mega project. And normally when you take loan for construction of building, it is for a longer period because you should have the capacity to repay. But government unfortunately says only 5 years it will be allowed. Supposing you have taken loan of 50 lakhs, repayable over 10 years period, you will be able to claim 5 lakhs only for 5 years. The balance 5 years, you will have to forego. You will not be eligible for tax benefit in the next 5 years. What are the details to be available in case of loans and borrowings registered? The loans and the loan register should give date, amount and date of borrowing, date of repayment, from whom I've taken loan, address of the lender, his PAN number or Aadhaar number. One of them should be available. Any application out of the loan also I have to mention details of amount of application, name and address of the person to whom you made, object for which I have done that. All these needs to be available. Okay, right? And similarly, any application out of the loan or borrowing also needs to be done. Repayment of loan also needs to be captured in my loan register. So this is a format of loan register which we have made, which we have designed in our office. Here again, I'm telling you, this is only an illustrative purpose. The choice is yours. You can design the way which is helpful to you. The name, date of loan, and receipt number, amount of loan, name and address of the lender, banker, ledger head, mode of receipt, PAN, purpose of loan, and ledger head. This is for the loan register. And repayment application also allowed to give loan and what are the applications you are doing, whether amount spent out of the loan, whether you are compliant with the various conditions, name and address of the recipient, ledger head, amount spent out of the loan calculated as application. Okay, right? And refund of loan. When you are refunding also, you have to maintain a register. Okay, we will have this. I think with this I will complete because I just have 5 more minutes for question and answers. I will stop with this. The rest of the things I will take it tomorrow. Okay, right? If you have any questions or anything, you can put it in the chat box. Then I will answer that, and the balance we will take it tomorrow. Thanks, Monisha. Thank you. Travel expenses for a conference or training outside India, would it amount to applied outside India? I think I've explained, Mr. Rajesh. See, when you're traveling outside to get trained and come back and use that experience, whatever learning in India, then it is not an application outside India. Whereas when you travel outside India, okay, right, for the purpose of preaching there, you get an invitation to preach there. The primary aim of traveling is preaching there. Then it is an application outside India. Okay, right? Donor, whether religious or charitable, do we need to get address, PAN, or other, or name for a small amount, 100? I don't think we need to get PAN order for small amounts, sir. But certainly, when the amount becomes bigger, you'll have to get that. In fact, ATG may be applicable to them, but if they are claiming ATG direction, then you'll have to get their PAN or other. If they're not claiming ATG, you don't need to get the details. When do we spend 15% accumulated amount? As we cannot spend next year more than, okay. The choice is yours. See, you keep saving. In fact, the year in which you are using this accumulated fund, it will not be allowed as application for you because government looks at only that year income. And if you spend that year income, they say, that's it, fine. They're happy with that. But you may have more need. Let's say the example, supposing you run an orphanage, right? Let's say you have 100 children and your expenses per year is, let's say, 30 lakh rupees. And by God's grace, every year you're getting about 30 lakhs rupees or a little over 30 lakhs rupees, and you're able to save this money. And 1 year, you receive only 10 lakh rupees. You could not raise, with all your effort, you could not raise more than 10 lakhs, and you spend the entire 10 lakhs. So government for that year will allow the 10 lakhs as application to you. But then you need to take care of, our idea is not to fulfill the legal requirement. That is definitely there, but our primary purpose is from the organization. So I need to spend the balance 20 lakhs. From where do I spend? I spend from my accumulated money. I have, the 15% which I save over a period. From that, I take and spend this 20 lakhs. But the government says, wonderful, you spend that, but I will not give that application because I'm not going to take this as an income for you, nor I'm going to allow this as an application. Current year, if you receive 10 lakhs, whether you've spent it, I'm absolutely fine with that. That's all. Okay. So this is for, a day when you're not getting the money. That is the reason why government allows this. Earlier, we used to have 25% accumulation. Now it is 15%. Now, it is for the trust, brother, Mr. Xavier. It is for the trust. 85% application is not for each institution. It is for the organization as a whole, for the trust as a whole, for the society as a whole. Okay. Okay, I think that's all main one. We will see tomorrow. Thank you so much for listening to me patiently, and I really appreciate all of you for joining. And tomorrow we will have some more sessions and some more complications. And each day you'll be learning new things. And please join everyone. Just because recording will be available, don't think You can listen to the recording. I honestly encourage you, all of you, to join regularly so they will get benefit. Okay. Thank you so much. God bless you all. Bye.